Hey everyone, it's Dustin Nulf with Keller Williams Realty's, the Dustin Nulf team, and the Full House LLC Pittsburgh Property Management. Today I'm talking about income, income streams, and kind of account structure. So I've had kind of a lot of agents asking about the numbers of the business. So when you're running a real estate sales team, I run a real estate sales team, a property management company, and I also invest in real estate. So I've had a lot of people asking me, like, what does the bottom line look like and all of that. So we're going to kind of look at that, but really what I want you to get out of this is the stream of income, how the stream of income works, and how you reinvest that income, and you can make sure that you're always going to have money that you can reinvest so you can create more income. So and the reason why I'm doing this right now is because I've run into so many agents, real estate agents, just people in general, people that just work 9 to 5, where like they literally are spending every single penny that they make. Sometimes agents will even have stuff spent before they even make the money. I mean, they assume that the deal is going to close, so they go out and buy $10,000 worth of lead products and stuff. So like how to make sure you're not doing that and that you're building your wealth instead of spending it as it comes in and living paycheck by paycheck. Okay, so this is an item or idea that took me 10 years to figure out the hard way. Right when I was starting to figure it out the hard way, I came across this Tom Ferry video, and I thought, wow, I wish I would have saw this 10 years ago. And I think, thank Google Analytics for that, or Google's algorithm for that, because they put the video in front of my face when I was thinking about it. It was like they read my mind. Maybe they are reading my mind. But anyway, we're going to look at that, and I'm going to use my 2019 income goals as an example here. So I'm going to use the whiteboard over here, and this is what it looks like. So this is what you want to work towards whenever you're building income streams. And if you ever heard the saying, the average millionaire has 7 streams of income. Okay, 7 streams of income. So how many do you have? The goal is to work up to 7, right? So if you want to be a millionaire, work up to 7 streams of income. And that's the funny thing is that they don't have to be big streams of income either, because they all add up to a big stream of income or a big flow of income if you do it right. So we're going to look at that. So this is what your income streams and your accounts should look like. So like you want your bank accounts to reflect this as well. Okay, so this isn't just an idea. You need to have like physical accounts that represent this, or that work under this structure. So I'm going to use 3 businesses as an example right now. I have the sales business. So I'm going to put that up there as RE sales, real estate sales. And then I have the property management. We're just going to do PM for property management. And then I have real estate investment. So we're going to do RE invest. So those are my 3 businesses. Those are my 3 main businesses. Those are my 3 main sources of income. So we're going to look at those now. So the idea is that we have these businesses. They're creating money, and then we pay ourselves a portion of that money, right? So 100% of the money that these businesses make get put into an operating account. So you have an account that's named an operating account. For every business that you own, you have an account named an operating account. So the first stream is that money comes into the business and it goes into the operating account. So those 3 circles there represent 3 different operating accounts. All right. So when you got money that comes into the operating account, as a business, you have expenses that you need to pay, and you have employees that you need to pay. You also have yourself as an owner. You need to pay the owner. And then you need to store money as well for things like taxes, insurance. If it's properties, you got to store money for maintenance and things like that. So you want to have a reserve account also. So we're going to have a reserve account and an operating account for every business. So there's 3 businesses here. I should have 6 accounts, right? Operating account, reserve account, operating account, reserve account, operating account, reserve account. Okay? So those are our reserve accounts over here. All right? So we got money coming into our operating account. We have expenses going out, which we're going to draw the expenses going out at the bottom here. So that's expenses. So with a real estate investing company, gas bill, electric bill, water bill, whatever bills you're paying, right? Mortgages, whatever. Expenses going out. You have real estate sales team, you're paying for marketing, you're paying for advertising, you're paying for a CRM, an IDX website, employees, whatever, expenses. Property management company, employees, whatever resources that you're using. Like we use Ring Central for our property management company. So those are all our expenses. So it goes into the operating account, goes out of the operating account, and pays for expenses, pays your bills. What you want to do at the beginning of the year or the end of the previous year is you want to plan for your reserve account though, and figure out how much you need to actually save to create either like a cushion for you. So like for the real estate sales team, the reserve account is more for, it's a cushion. So it's a safety net, and it's also going to pay for our company taxes too. So we want to figure out how much we're going to need for taxes and how much we're going to need for that safety net. So that gets moved over into the reserve account. For the property management company, it's a similar sort of idea. We need X amount per month in order to survive. So we want to have 3 to 6 months worth of money in a reserve account. So it gets moved over. For the real estate investment companies, we do a reserve account for taxes. We do a reserve account for maintenance. So we got maintenance money that's being put in there. We got tax money that's being put in there. You can do insurance in there as well, or you can do mortgage if you want to. But mainly it's just maintenance and taxes that we structure for and we send over there. So that money's moved like this. And in a real estate sales business, I would recommend that you're moving a good chunk of money over there in that reserve, honestly, for a little while. Like you want to get it saved up. You want about 6 months, I would say, of cost. So if it costs you $10,000 a month to run the business, you want $60,000 in that reserve before you stop putting money in it. We'll talk about numbers later. The whole idea is just get the idea of this first, right? So that's money that's moving right there. The only thing that hasn't happened is we haven't paid ourselves yet, so we need to make sure we pay ourselves. So that's the other thing. So I have a personal checking account. So I'm paying myself from each business. I pay myself a little bit. So here's the, for example, the real estate sales team. I pay myself a salary of $36,000 a year, and then I also pay myself $24,000 a year in dividends. So the sales team can profit $100,000, and I only pay myself $60,000. So no matter what, that's all I get paid right now. And the whole idea is there, if I have a good year, I'm going to stash the money, and then I can use that money to reinvest. So if I want to hire another employee, or let's say I want to start a new inside salesperson or something like that, I have the money stashed away to do that. The property management company right now, I'm getting paid $24,000 salary and $24,000 in dividends also. So that's $48,000 total. So I got $60,000 plus $48,000. And then the real estate investment company, I'm only paying myself for the properties I personally own. I pay myself $25 per door per property. I try to make sure that all of my properties cash flow at $100 per door per month. So if I pay myself 25, I still have 75 a month that's just being stocked away. So I've been in a nightmare of maintenance surprises with my properties because I didn't plan correctly when I bought some of these ones a couple years ago, and now the surprises are popping up. So I haven't been able to pay myself that cash flow, but it's looking like that's going to happen January of this year. So it's planned for 2019. That's budgeted, and what that looks like is right now for my personally owned properties, it's only $225 a month. I don't know what that amounts to. I'm going to say like maybe a little under $3,000 a year. So that's it. So the idea is that you're paying yourself less than you're actually making because you don't want to blow every penny that you make. In order to grow a business, you need to reinvest money into it. If you're done growing the business, that's fine. You still want to make sure you got your reserve accounts built, so if you have any surprises, you got the money to handle it. If you do that and you don't want to grow the business anymore, then pay yourself everything. But the whole idea is that now you got a large, nice chunk of income coming in over here into your personal checking account. Now you want to have that automated, so it's got its own reserve account, and that's called a savings account, right? Or you might have multiple savings accounts. So I have money that's automatically, I have at least $500 a month going into a savings account. I have both my wife's IRA and my IRA are being maxed out every year. So I'm paying, even after we get that stuff in our checking account, I don't spend all that money on like dumb stuff. A lot of people buy dumb stuff. I put around 50% of what we actually net in our checking account, I put into investments. So we have IRAs, we've got 529 plans for my kids, me and my wife's kids, as well as my nephews and niece. And I stash money in the savings account. The idea with the money in the savings account is that my wife and I are going to reinvest and start buying real estate with it. We've been saving money to buy a house as well. So all that money's getting invested someplace. So we're permitted to spend half of it, and then the other half we have to save and reinvest. So the idea is this money that you're saving and reinvesting, it's going to come full circle and end up back at that top creating more income, and then that income gets fed into this machine here, and then it gets spit out again, and you're reinvesting more of it. So it ends up becoming a snowball effect of your net worth and your passive income streams get greater and greater because you're reinvesting the money. So it's super important. I would say, if you're new to business, new to real estate sales, new to real estate investing, like this, not even real estate related. If you're running a business, a cleaning business, landscaping business, whatever, run it like this. This is how smart business people run their businesses. Run it with this structure, pay yourself, reinvest, make more money off of it, keep building it. This is how you build wealth. I hope you enjoyed this. If you enjoyed this, please like and subscribe below. You can also gain real estate sales coaching, team building coaching, and or investment coaching by going to my Patreon link below as well. I also have links to some of my favorite books that I've read along the way. Thanks again for watching. See you again soon.